Hey, good morning, everyone. Happy Sunday. It's 11 a.m., March 29th, and we are going to do a U.S. equities outlook, and probably we could kind of look at the whole world outlook as well in terms of how economies across the globe are being impacted by the virus. But our focus today is taking a look at how the virus has impacted the U.S., the options that we have going forward of how to solve the economical issues as well as the health issues that the virus is posing. And we'll discuss a couple of different metrics regarding how the economy is looking, how the markets are looking for, the forward guidance for the few weeks ahead and few months ahead. Okay. So with that being said, I have our equities analyst, Faisal, who's been doing some fantastic work in the equities channel right here, providing us updates day in and day out. So welcome, Faisal.
Good to be here, man. Hope you're doing well.
Yeah, not too bad, not too bad. So, Faisal, we were discussing, on this call just before we got on, um, the coronavirus outlook. Let's be real, it looks really shitty. Okay, um,
Hmm.
and I like the statement that you just made before the call. Is this is kind of capitalism market's worst nightmare, right?
Yeah,
As you look at the count of infections and death rates, like what is your thought process when you're starting to look at this market? Are you fearful? Are you approaching the market and thinking that, okay, well, I think it's going to go away soon. I think I need to start looking for, more, I don't know, buy or long opportunities. Or are you simply in, the same bearish mindset that I am?
that's a great question. It's a really tough time right now. My job as a trader, I like to look at the markets and tell me what they are, or kind of read what they're telling me at that moment. So, sure, I really think this virus will get worse. I don't think people are taking it seriously, especially here in Houston. I think it's definitely going to get worse, and we have not seen the worst of this virus yet. So in my mind, that means consumer spending will stop. Just relating to economics, consumer spending will stop and maybe even come to a complete, not a complete halt, but like 90-80% halt as restaurants close and only really essential businesses are open. It's a tough time. It's tough to gauge what is priced in and what's not, because you've had a lot of assets that can still operate in this environment, like CVS or Uber, and they're kind of becoming essential industries in this environment. As we're not able to go out, we must rely on delivery more so. And with shops like CVS, drug over the counter use um, is probably going to be more, what's the word, frequent. So I mean, you're having these thoughts like, okay, things can still operate in the environment, but if the entire country is going to get worse, I don't think these guys are immune to the effects that are going on, because it may not be priced in, and that's the question that I consistently ask myself: is have we priced in the worst? The worst drop in the history of the market, 30% in 1 month. Is that enough to justify what's going on right now?
Right.
And for me, it's like, okay, I think this thing is going to get worse, but the drop was so significant as the market already priced it in, you know. And I think this scenario is really tough for the market to digest. I've been watching the market a long time, and usually it does not get scenarios wrong. It likes to discount things early, and usually it's right. So when the market was going up January, February, it was not discounting this thing at all, even as it was spreading through China. It really was contingent on the fact that China was going to contain the virus and contain the spread. And ultimately, as we saw last month, it got it completely wrong. And I think when the market gets it wrong, that's when the volatility hits the hardest. And so once again, it just comes down to, have we priced in the worst? And if I believe that the worst has yet to come, how is it possible to price in that effect? So I continue to believe that this market has more to go. The low that we made about a week or 2 weeks ago is not the low. I think we're maybe 60, 70% done with the correction, we may see another huge volatile spike to the downside. But yeah, that's my theory. But again, I'm day to day on the market. I'm going to let the market tell me what it wants to do. So this is a new scenario for everyone, you know, for big hedge fund managers and small traders like myself. So it's really important to kind of take your own opinions out of the equation, because I'm not an expert on disease. I'm not even an expert on markets during times like this. So I just let everything kind of tell me what it wants to do. That's why I'm continuously looking at leadership stocks, continuously looking at index momentum points, everything that is kind of minuscule that I would factor in when the market was going up. It wasn't factored that much. But now it's like I'm taking everything very seriously. I'm looking at a bunch of different factors because there's so many interwebs, whether it's interest rates, oil, everything is kind of going wonky at the same time. And you have to pay attention to everything, because I think one of those things is going to give you an early warning sign that either the market is done going down, or that it wants to go down some more.
Great point. Great point. And I like what you said about essential companies like CVS and Uber. That raises one important point, which is the inflection point at which we are in America, specifically regarding consumer prices for products, which directly ties with inflation. Okay, so one important thing that I've noticed in past bearish cycles is that more often than not, the U.S. has been pretty good with controlling inflation, which pertain to the consumer goods prices. Now, in this particular instance, because the global macro markets are already slowing down, imports and exports are significantly down. The U.S. has to try to figure out how are they going to contain the price of goods while still being able to maintain the production of goods, and ensuring that their citizens, who right now are probably, majority of them are starting to lose jobs, how can they make sure that people have enough money to pay for the goods, but also make enough goods in the US so people can buy those goods, right? And
Yeah.
so in this particular instance, what I'm really fearful of is sort of a drastic inflation spike over the next several months, or maybe even a year or two. And that would really sort of accelerate things in the US to go in from recession to depression levels really fast, because you're already at the point where we saw 3.2 million jobless claims last week. This week, they're projecting another 1 to 1.5 million. So tack on, let's just say we're close to 5 million by, next week, right? And that's only going to go up. And we were just discussing something regarding the outcome of the economy versus the virus, which is that we're in a really tough position where, number one, the U.S. has obviously not done anything to, sort of slow down the growth or curtail how the infections and deaths are ramping up, because we don't have countrywide lockdowns, at least I don't know of. We don't even really have citywide lockdowns where people are following them religiously, right? We have cities sort of advising people to stay in, but there's no city that's saying that if you go out, you're going to get fined or jailed. And I think that's what it might take for people to realize, hey, shit has hit the fan. We need to start being careful, or else things are going to skyrocket. And we discussed this, that, the two options for the virus right now versus the economy is, if we prioritize the economy over the virus, which it seems like the current administration is essentially pivoting towards, it's we let the virus rip through the economy and the population at a significantly faster pace, right? So that means that the U.S. population is 327 million. So if we multiply 327 million versus 1% mortality rate, we're seeing at least 3.2 million people that are dead, whether it's next few months or by the end of this year. And it's almost undoubtedly that we're going to see this kind of death rate coming out of the virus, not to mention the people who may have severe, other issues regarding their health, whether it's significant infections or the hospital system just not being able to take in that many people. It may not be the virus that kills them, it's the ineptness of our system in general. So the point is that number one, the option is you favor the economy over the health, which means you're ultimately going to get this number. And by the way, this is a low ballpark number. Mortality rate of 2%, that brings us to about 6.5 million. The option number two is we favor the health of people over the economy, right? And that means that we may have slowdown for another quarter or two, but we'd save a significant amount of people. But we then forego a significant amount of economical growth, right? And so that means that the government would be in a very tough situation where we'd essentially have to be able to tell people that you cannot go to work, you have to isolate yourself. So that means productivity goes down. That means the GDP goes down overall, and the government would have to backstop the slide of the market, as well as rent prices, loans across the board, etc.
Yeah, I mean, there's a ton of issues, exactly just how you mentioned. I think the only thing with the mortality rate, I want to give a little bit of value to therapies and just the amount of technologies that are being developed right now that are going to help people recover, whether it's through drugs or actual medical technology. But man, it's like, it's just spreading so fast. Like we're not even having the time to develop these therapies, let alone the vaccine. So, I think that low ball number, it could be slightly lower, but I definitely think at least 1 million people will probably end up dying, even if we have therapies and recovery procedures, start to be developed from now till maybe the end of the month or in 2 months or something like that.
Yeah. And just to, not to get political, but the Guardian wrote this really good piece about, how the U.S., especially the current administration, completely just botched this whole approach to coronavirus. I mean, obviously, middle of February, Trump was out there screaming at the top of his lungs that this was a Democratic hoax, and this was nothing worse than a flu, and this was the Democrats trying to take down, the presidency. And now, obviously, he was completely wrong, which, he won't admit it. But now we have 124,000 cases, 2,200 deaths, and this is not slowing down, right? And even then, I just told you a personal example of, my dad, who I think now has the symptoms of coronavirus. He called his own doctor, and his own doctor said that what it seems like he has is, something like a strep throat or a flu. But his own doctor refused to also see him in person, and he said that you can make an appointment for next week, which is tomorrow. So 1 week of, my dad not knowing exactly what he had. You don't know where he went. You don't know who he touched, but he was also not given the proper precaution and care how you should be treating everyone, which is that you should be looking at every person as a coronavirus victim, because you don't even have enough tests, nor do you have tests to tell people that they actually have the coronavirus or they don't. So if you don't have that, you should actually just assume that they have coronavirus for, them being able to spread the virus, at large.
Yeah, doctors should definitely recommend that they just self-quarantine themselves if they have any type of symptoms, or just treat it as if they do have coronavirus. I think exactly what you said with people going to the doctor, getting their symptoms checked out, and then ultimately getting the all clear to kind of go around, this is just an average cold, you'll be fine. That's exactly how this thing is spreading so fast. And like you said, your dad could have touched many doorknobs or other things that other people could come in contact with. And who knows how many people, if he does have it, I hope he doesn't, but who knows how many people, if he did have it in that week's time, that it could have affected.
Yeah.
So
And
it's
also,
insane.
we don't know who gave it to him, and if that person even found out that he or she had the coronavirus and where they started walking around. So it's really just, this is how exponential numbers, work internally. It's that people just don't know what they have, and then they keep, going around and touching products and things and people and, coughing and whatever. And that's
Hmm.
why you see the rapid spread. That's why we've been on this exponential curve for the US, because we didn't do anything back here, because we were just avoiding it. We thought it was a hoax and it was a flu. And so this is, in my opinion, and obviously, the opinion of this particular article right here, how is it possible that the current administration, the government, had failed so badly, and your mom and dad's podcast over here yesterday, they mentioned that there was hedge funds and institutions who actually knew that this virus was going to rip apart, parts of the market, and they actually got out, and I think they shorted the market well into January and February. At least that's what the podcast talked about. So how is it possible that the US government, some of the strongest and smartest people in the world, were not able to catch something like this, and were, as it says, willfully neglectful of a situation? And now we are where we are with the numbers all the way up here.
Yeah, no, I think you're right on this administration has not done the best job in containing it, but I think China definitely January, February, I was reading all the headlines from there. They were consistently saying, we have this contained. You need to believe us. We have the ability to shut everything down and contain it to the best of our ability at this time. There's nothing really stopping them. They were taking it seriously, or so we thought. And I think that also plays into it, that type of misinformation. I don't know if they were being totally honest with us, but it's just a multitude of things. I don't know if you can blame it entirely on Trump or how he's handling it, but definitely how he's handling it now, he's not taking it as seriously. If he wants to say he wants to reopen the economy by Easter.
Yeah, no, that's a great point. That's a great point. Now, going back to the internals of, how the virus has impacted the economy, once we start looking at the numbers, I mentioned this chart to you. As of March 14th, what we've seen in restaurant occupancy is a significant decline in major cities across the board. And by the way, this is March 14th, so that's 15 days ago. Okay.
Mhm.
Now, one other statistic that is very alarming is small businesses, okay, across America have about a cash buffer to survive for just about 27 days. So given the fact that, we've already started to hamper, the current business cycles of small businesses and restaurants significantly, they have probably 15 days left in terms of their cash buffers. And by the way, this is only the businesses that are actually saving money. Those that did not save money are already, in my opinion, out of business. Well, it's not really an opinion. They are actually out of business, or they're on their way out of the business. And I actually read a statistic of 20% of businesses, if we don't solve this crisis fast, will be permanently shut down. Okay, and that's across America.
Yeah, I don't know about that. Like, I think the health of the banking system and the ability of the banks to really extend credit lines during this time. This is, like I said, this is not your average financial crisis like we saw in '08, where the banks were heavily leveraged or anything like that. Like, they were pretty. I've talked to some people who work at JP Morgan and other banks, and like I said last week, I believe he was not too worried. He said the banks were extremely healthy and they were ready to tackle on the problem that was happening now. But like we've kind of discussed, it's really hard to gauge how long this problem will be and how many webs it can affect as far as supply chains, businesses, and the structure of loans. They may be healthy now, but those credit lines may shore up, especially if oil starts to collapse even more, or other sectors of their portfolio start to collapse. Sure, the small business owner may end up seeing a lot more stress, but I'll give it a little bit more than 27 days for them to stay alive.
Okay. Well, this was just research conducted by JP Morgan Chase, just stating that on average, small
Hmm.
businesses only have a cash buffer of 27 days to survive. And
Yeah.
that, when the economy or the business is just not able to maintain, the current revenue streams or margins.
Yeah, I mean, cash is like, so most of these small businesses are probably restaurants or something like that, and those are not cash generating businesses. They're highly leveraged businesses, very thin margins. So it makes sense for them not to have a big pile of cash. But I think these banks know that, and at least for now, they're willing to lend a pretty good hand.
Good point. Good point. Now, going along with that, I had mentioned this fractal to you, and as someone who really enjoys the technicals part of markets, I saw this and I thought this was very intriguing because if we look back to the 1929 to 32 depression, you could see sort of a similar, structure in terms of the development of the cycle of how it went up to went down to present day. So you can see this yellow box and a double top looking thing pulls back, pushes up, consolidates here for, about a year, year and a half, and then pushes back up again, hits its, new all-time high in, August 1929, and then cycles down almost 89%. Okay, so if we forward that towards, present day, again, same thing, sort of a double top looking structure, pulls back, pushes up, consolidates here for a good year and a half, 2 years, pushes up some more. And now, obviously, given the current factors of how the virus is impacting this thing, not saying that, we have to get a negative 89% decline again, but I just find it kind of interesting to look at fractals like this because I do believe that there are patterns in nature, patterns in markets. And so is this something that you ever pay attention to? And if so, do you believe that, this cycle could play out, not 89% or 88%, but maybe even halfway to around, I don't know, 40%, 50% declines?
Yeah, I think when you're dealing with this type of scenario, it's so unpredictable. We really don't know what to expect as far as the short-term effects because we're still dealing with the event and the long-term effects with how fast the consumer is able to recover and businesses able to recover and whether or not the structure of the entire economy has changed from this event because it's just affected it that much. But part of me, when I look at long-term charts like this is the bottom was kind of made in 2009, I believe. So from 2009 to 2020, we had all these significant gains. And in my mind, to wipe out 11 years of real earnings and significant revenue, just in the span of 1 year, because we may have this issue for at most a year, like I'm thinking we're not going to be dealing with this. Like we're going to have a vaccine within a year. And I think even if
Yeah,
people are a little bit hesitant to take the vaccine, I think a lot of people will take the vaccine and we may have, at least definitely by 2 years, I think we will be cleared of this. Hopefully we don't get hit with something else. But
right.
in 2 years, we're going to get cleared of this. Is it rational to wipe away 11 years of significant gains because of 2 year stops, two-year declines? Granted, they are sharp declines, but where is the rationale in this? Because once everything is kind of all said and done, business should kind of go back to usual, right? Unless there's really some significant change in how companies operate, the ability to get a loan. You know, who's to say if inflation spikes up, we're already going to zero interest rates. Like, what is the Fed going to do if inflation starts spiking?
Right.
Uh, um, it's not like they're gonna, raise rates. That would just be terrible for the economy. But um, you know, it's so confusing right now. I just don't know. But that's my rationale. You know, we've had 11 years of gains. Is it rational to wipe it away just because at most 2 years are going to be bad?
Right. Yeah, that's a good point. Keeping that in perspective definitely is important. I think my approach to the market is I want to look at this as a event that the humanity has never seen. And so if humanity has never seen something like this, the approach as well as a reaction in terms of the markets and economy is also going to be adverse. Okay. So when I look at the markets, I think given the way the world at large, especially the US, is so, I would say, I don't know, not as fearful or rather still, optimistic, it just makes me realize that people are still clearly, you know, possibly under a delusion that this market has the ability to sort of just V-shaped recover, and we're just going to bounce up out of this and just go back to normal like we were, pre-corona. And the business cycles, if you look at them at large, whether it's coronavirus or recessive environments, you kind of don't just jump out of it, in a 180 and just say, all right, all is good, starting next month or next quarter. It's usually a process, right? It's a multi-month, multi-quarter process. And given the fact that we had significant economic slowdown, I would probably say this has to be at least a 12 to 18-month process. That's just how it goes. That's what it takes for businesses to come back to life, to be able to cycle back into, the previous revenue streams that they had, for people to get back to work. That's just how business cycles work. And that is how market cycles work too. So when I look at a cycle like this, I don't see any way of recovering out of this for another 12 months. Doesn't mean the market has to keep going down for 12 months, but it also doesn't mean that the market is going to pick up in the next 12 months.
Yeah, no, that's a good point. I want to point out, what happened with the trade war. If we can go back a little bit, you saw the significant declines because there was a lot of risk as far as supply chains being disrupted, potential business being lost in the long term. But the market, once it got the all clear, and it wasn't even when we signed the trade deal, actually, it was a little bit before. The market bounced back significantly fast, and you saw a V-shaped recovery in that aspect. So you
Yeah.
can see V-shaped recoveries if the market factors are predictable enough. The problem is where these factors are totally unpredictable. It's a way worse scenario than if we were to even have a real trade war, to be honest. This is like I said before, this is capitalism's worst nightmare. We fueled growth and got into a ton of debt because we said we are never going to stop producing. And when we have to stop producing, these are someone's got to pay the debt. And so these
Yeah.
are now the problems that we're dealing with. So anyone who's saying that we're going to have a V-shaped recovery, first of all, don't listen to them. Even if they're basing it off of what happened in the trade war, you could take that technical bounce for what you will, but it's not the same scenario at all. I think sure we have to come down more, in my opinion, but you're going to see more of a basing as far as when we start to develop better therapies and start to see a lot more recovery and slower cases, cases start to slow down. I think you're going to start seeing a basing of that, and then we can ultimately, like you said, get back up slowly and surely, because I think there will be some long-term damage from this event versus what happened with the trade deal correction.
Great point. Great point. And last but not least, one of the other metrics I was looking at is, the unemployment rate factored in with the delinquency rate on consumer loans. So, for example, whether you have, mortgage-based loans, car loans, auto loans, property investment loans, etc., you're now starting to sort of see, a ramp up in those delinquency rates. And obviously, Lisa Abrahamowicz, she put out this data, which was really interesting because given the fact that, the U.S. stimulus bill has passed, how fast that money gets to people's pockets and they're able to start, paying off their loans as well as, say rent or taking care of their basic needs, that will also be one of the big factors of understanding what kind of impact we're seeing after this whole car wreckage, right? Because the economy at large is it's either already had the car wreckage or we're in the middle of it and we're seeing the car basically being thrown off the road. And so the example is, once you sort of have a car crash, the after effects of the car crash, which is, seeing your car torn apart, what it's going to take in terms of repairing the car and your personal damages are all going to be seen much later on, right?
Yeah, and your psychological long-term damage. You may not want to drive a car for a little bit, just like people may not want to go outside at first because they may be still afraid that they could catch a disease or that same disease or whatever. You don't really know the long-term psychological effects it could have on a consumer. It could push them to start using online services more or delivering more, but you're absolutely right. on the car wreck analogy. I like that.
Great point. Great point. Now that, we're talking about how people are going to start reacting once, let's just say, things get back on track. I want our viewers to understand, what our approach to the market is. So one of my ways of looking at the world after a shift like this is kind of like you said, people might start being a little bit more dependent on virtual technologies, as well as trying to look for more work from home projects or jobs. So that means that, let's just say, stocks like Zoom might start seeing more of an impact on their business. I mean, obviously positively, right? Their stock might start going up. Number two, I actually think, and maybe you can relay your thoughts, I actually think the world at large is going to be a little bit more cognizant and aware of what they put into their bodies. So I think, number two, I think Beyond Meat is probably going to start, seeing a major movement, in terms of their consumption too. Because at least in America, I know this is already a trend that's starting to build. Obviously, the last cycle of the whole stock market dropping, Beyond suffered with it. But if I get to pick this stock up, somewhere near the bottom where it opened at IPO or even lower, I would love to buy Beyond Meat, whenever this whole, cycle of, the market selling, whenever it clears, I'd love to pick up Beyond Meat. Do you have stocks like this or ways to look at the current economy in terms of what am I going to look at a year out, 4 years out, and what do I want to buy?
Yeah, definitely. Well, but before I get into that, I want to talk a little bit about Beyond Meat. It's so funny that you mentioned that because I literally go to the grocery store, maybe 2 times a week, and I swear all the meat is cleared out. The only thing that is available is Beyond Meat.
Really?
They have so many Beyond Meat products. It's like no one wants them. I don't know, maybe because I'm in Texas and we love steaks and meat and stuff, and people really like to trash on vegan food and stuff here. But man, like the entire meat section, there's nothing. There's only Beyond Meat. So I don't know. I don't know if that's reflective of the entire country, but you're right. I think people will be conscious, but I don't know as far as, with Impossible Foods coming into IPO fairly soon, and Beyond Meat kind of having, at least in my viewpoint, because I've seen it, they're just not selling as many products compared to regular meat. So I don't know if the consumer habits have really changed that much to what you're saying as far as, people really watching out for what they eat. But, I think it's perfectly possible that once this thing is over, people are like, if it came from, but see, that's the thing, like we're kind of eating chicken, beef, cow. I don't know if it'll have any long-term push effect as far as pushing people away from meat and going to
Yeah.
alternative products like this, but it could happen for sure.
I think the consumer overall around the world, probably at least in the US, is getting much smarter. I think that the US consumption of alternative, meat diets, such as the plant diets or the soy diets, have actually gone up significantly. It may not be obviously representative in terms of what you saw in the store, but I live in Medellin, Colombia, and last week when I went to the store, Beyond Meat has their own little section. It was completely sold out. Okay. So
Wow.
I went back a few days later and I saw them restock. Then I bought up like 15 different, packets of Beyond Meat. So I pretty much, bought up all their products. So
Hmm.
at least in, Medellin, I mean, the area that I live in, I know is, somewhat of a good area where people are a little bit more, um, I don't know, not frugal with their money. They want to go out and spend and buy good products. And with good products comes, sort of better foods. And better foods, in my opinion, right now is Beyond Meat. So over here, the quality of meat is actually really good, but I have not seen meat sell out in Medellin as you have in Texas. Actually, I saw the other side, which is Beyond Meat was completely sold out, and I had to wait, a few days. And then I went to the store and I basically bought up all the Beyond Meat section.
Damn, that's crazy. That
Yeah.
is so crazy. Because
So,
like
so,
I went to like 3 different grocery stores and that's all the same.
but you're right. Listen, Texas is a whole different animal. And when I was in Austin, I don't think I saw Beyond Meat just sitting there and not being bought. Obviously, the shelves were stacked, but I don't think I would come back the next day and just see the same products in the same area. I would see Beyond Meat being moved. I would see the products decline. I would see people buying it in their own grocery carts. So for me, being in Austin was different, and even being living in Florida last year, I don't think there was a single week when I went grocery shopping that Beyond Meat was just completely stocked. And I definitely saw people walking out with Beyond Meat burgers and sausages and their ground meats.
Yeah, they're good. Like I like them. I don't know why a lot of people don't like them. It gives me a more opportunity to get them
Right.
because they're like always available. But going back to your point on stocks that kind of will may benefit from this time frame and may continue to carry that momentum even after this whole thing is done with. There are stocks like I've mentioned Uber. I think uh, you know they really have a great long-term opportunity to build a huge brand with their food delivery system and maybe branch out into other areas. Like I read that they were going to do coronavirus testing deliveries and different interesting stuff like that. So one key thing that I look for in a company right now is adaptability. Are you able to adapt your model or your service to the environment that we are in right now? Even though most things are open currently right now, I'm kind of looking for, can you operate in an environment where there is a lockdown? Will the government need you to operate? And so, I've mentioned Uber, CVS, across in China. I like those plays. I've mentioned JD.com. I think they gained significant brand momentum. They were growing very well. Alibaba too, but JD has just held on really well technically. EDU, New Oriental, they do online. They're a Chinese company. They do online education. They've held on very well too. It's a great stock. Uh, there are a couple things. I think my number one thing still, I always tell people who are asking me, what's your favorite stock in this environment? I still think Microsoft is the king and will continue to maintain its dominance that it had before the coronavirus in the cloud space. So right now, they're really benefiting from one, if you're operating, you probably still are, I mean, businesses today are still operating on the cloud and for the most part have to share information through that medium. So they still have people subscribing to that service. They have the Xbox Marketplace, which is probably seeing an uptick in downloads in multiple games as people stay home. They're a gaming publisher as well. And they also have a lot of interworking uh, or inner communication software, like kind of like what Slack does with Microsoft Teams. I don't know if you read, Slack is actually working with Microsoft Teams to integrate some of their software with that platform. But Microsoft continues to be really diversified in this state, and they can adapt and have enough cash to adapt. And I think they had so much going for it before that once this thing is over, I think I'm looking to place a ton on Microsoft.
That's a great point, and I'm actually a big fan of Microsoft as well. I truly think that the new CEO, Satya Nadella,
He's all
that
time
guy,
great.
he is a genius because I think he looks at the world of not where it is today, but like how can I make this company grow for the next 5-10 years out. I mean, obviously that's a job for most CEOs, but I think sometimes most CEOs are stifled by um, what they need to cater their business to for keeping their shareholders satisfied in the present moment. And I think watching some of the interviews with Satya Nadella, he has this very unique outlook of the world of how he wants to build Microsoft. Basically, how the same way I would say Amazon was built out by Jeff Bezos. You know, the way they can look into the future and start building their business models towards that, I think is really fascinating. And I really think that Microsoft has that winning mentality of looking out into the future and building for the future.
Oh, I totally agree, but I'll give him, like, I think he's a way better CEO than Jeff Bezos, and I think he is still, he's been the best CEO for the past couple of years, and he's still like, when when he came into Microsoft, I mean, they had just bought Nokia. He had to write off everything, I think, within his first year of CEO. I mean, they had a lot of debt. They weren't even in cloud. And he just said, we are going to go in an entirely different direction. And we are putting all our chips on cloud and the growth of the cloud enterprise sector. And the products that he's able to come out with, he has not only built like products, he's built ecosystems within ecosystems. And I think he is still the best CEO. And honestly, aside from all their products aside, you want to buy stocks who have the best CEOs at the helm.
Yeah,
And Microsoft continues, in my opinion, to have the best CEO.
definitely. He took over what, 2015 or 14?
I think so, something like that.
Somewhere
Maybe a
around
little
there.
earlier.
Yeah. And let's look that up because I want to find out exactly, because I want to see, what the stock price was back then, because I know he's just taking it sky high now.
Hmm. Yeah, I mean, he's changed it from a really hardware company with a lot of debt to now a high growth software company in just such a short time. It's
Right.
amazing.
Yeah. So it looks like he took over in 2014. So yeah, I mean, in 2014, stock was right around here, around the 39, $40 area.
Yeah.
My God. I
Yeah.
mean, sheesh. This is why, you make a great point. Like looking at management and who's at the helm of companies is probably one of the single most important things that you want to look at. Obviously, aside from the business itself, because a bad business can be turned around by a really good, high visionary CEO. But, a good business with a bad person at the helm could completely get torched.
Yeah, it's true. And like it really goes with saying that when you have a good CEO and a great CEO actually, it will always be priced into the stock. Like this stock is expensive and it trades at a higher valuation than let's just say a Facebook or a Google, even though the rate of growth is not, I think Google and Facebook are both growing faster. Um, the 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 level of quality of the CEO will always be baked into the stock. You can see it with JP Morgan and the banks. You can see it with Amazon, with the retailers. Betting on a CEO is not just good because, you think they're smarter, they're going to be able to manage crisis differently, but it adds a level of safety to a stock that some people don't realize.
Yeah, great point. Great point. Now, finally, I want to, we're talking about value and what it means to have the proper stock of a price in relation to where the market is, and we spoke about that I think last time as well. One of the key indicators that Warren Buffett and I think a lot of big players in the market follow is this total market cap to gross national product. And again, total market cap is the value of the entire stock market of the U.S. And this is, one of Warren Buffett's best, I guess, single most widely used indicators. And the GNP, for those of you who are watching this video and are not aware, is the total market value of goods and services produced by the residents of a country, even if they're living abroad. Okay, so investments overseas, etc. Okay, so GNP and GDP are not that different because, as you can see, as per the chart, they're pretty much the same value and they pretty much move together. Okay, so the importance of looking at this particular chart is that at present moment, if we're looking at the total market cap of the US to GDP, or a total market cap of the stock market versus GDP, we are currently valued at 117%. And based on the spread of that value, we can see that this particular metric states that the value of the stock market, or stocks in general, are still significantly overvalued. And by the way, this calculation was done just this morning. Do you look at metrics like this, Faisal? And I guess, what is your opinion on something like this?
I'm gonna be honest. Usually, I don't really look at metrics like this. I think right now, though, in the time that we're in, I think I should be looking at things like this. I think this could give you a hint as to whether or not we are fully priced in or not, especially if you think that there's more downside as far as the spread of the virus and the restriction of how many goods are going to be produced. I really don't have much to say as far as level of GDP in relation to how the market reacts, but I definitely think that if you're going just on this, I haven't read enough to give you a really good opinion on it. Sure, it makes sense. Like
Yeah.
if we start to diminish our ability to produce, yeah, why should the stock market continue to trade higher? It should actually go lower.
Right. Yeah, that's actually a good way to look at it logically. So it's pretty simple to understand that if your GDP or GNP is suffering, as it is clearly right now, the market itself, is clearly overvalued and it definitely should not be going up anytime soon, especially given the fact that, a majority of analysts and, even big fund managers were talking about the market was, severely overvalued up here. And, again, this is from people like Raul Paul, um, people like Ray Dalio, Alhambra Investments. A lot of these people were talking about sounding the alarm, even middle of last year around this point.
Hmm.
Um, so given the fact that, we had this overextension to the upside, to some degree, the technicals or even the market data was pointing to the fact that this was kind of a extension that did not make sense in terms of how the underlying economy was doing or what the data was pointing at. So it's very possible that this particular metric, as well as how the market is coming down in relation to external factors, could mean that we could have more potential downside and more of a correction over the next several weeks or months.
Yeah, I agree with you on that. I think the market is a discounting mechanism, though. So even if things don't look good at that moment, when we kind of had that double top before we broke out, it may have been saying that we were overvalued, but it's discounting the growth rate and all these other things, 3, 4 years down the line. So it's going to continue to go up, even if the metrics are saying now we are overvalued. That's just the way the market works, in my opinion. It is truly a discounting mechanism. But as you can see, we broke out thinking everything was good. The economic backdrop was really good. I had been saying that a bunch, especially after the trade war stuff was kind of cleared up. We really had low interest rates, pretty great consumer, low oil prices. So consumers had a lot more money to spend. Everything was going pretty well. And then the market just had to factor in. It had a discount. Oh shoot, what if we have this huge stoppage in business? And
Yeah.
so that's exactly what you're seeing. So I I get kind of looking at the data that's coming out now, but just understand that the market will always discount things for a year, 2 years down the line. So if it starts to see that this thing is recoverable fairly fast, I would not be surprised if the market starts to trade up a little bit more.
Great point. Well, on that note, we will end that conversation here. Um, Thank you guys so much for watching, folks. Again, if you want to have more analysis like this and you want to be more involved in the community, uh, starting in about a week or so, we're going to have the Forex channels, options, and oil channels opened up to our Advantage members. So go to the Cryptosomniac link below in this YouTube description. Come join the Advantage membership before we hike up prices. Because if you are already grandfathered into our current prices, we're not going to change the prices and hike them up for you. So make sure you join before we start adding these new features, okay? Um, so yeah, hit a thumbs up, leave us your comment and your thoughts. Until then, we'll talk to you next week.
Have a good one, guys.